All right, well, let's talk about the metal index. That's under pressure after investors, they assess China's National Development and Reform Commission's press conference. That's the NDRC. Well, the NDRC chairman said that they can fully achieve the 2024 economic goals, though they admitted that the economy is facing increasing downward pressure. They said that they will set up counter-cyclical measures to accelerate the local government to use, use of bond money on projects and also to issue a 100 billion yuan investment plan for the next year. Now, there was a sharp fall in the Chinese markets from the highs. Even commodities came off the highs. This post NDRC's comments. Iron ore prices, they corrected close to 3 to 4% from the peak that we saw on intraday itself. So what did the markets not like? Well, the Chinese policymakers, they didn't roll out any new stimulus. That was the hope that the street had out there. The belief was that the conference lacked any kind of new measures, any kind of new stimulus that would have excited those markets further and also kept commodity stocks as well as prices in check. Well, additionally, there was a lack of urgency as well, and that's what underwhelmed investors, as no specific details were given with regard to stabilizing the real estate market that's been in a mess out there. Phillip Capital, they came out with a note with regard to Indian listed companies. They're recommending buy NMDC as they believe the company is in a sweet spot. The key reasons are Odisha prices, well, they have increased, and since the second half of the year is strong, volumes will pick up. They also expect domestic iron ore prices to remain healthy, and they also recommend buying SAIL because that's a quasi-iron ore play because they get all their iron ore from captive sources. While on NALCO, they recommended holding on for further gains. In fact, we spoke to the management of NALCO earlier today, and they said that they expect alumina prices to move to around $600 per ton and hold around them because the alumina global market itself is in a deficit, and that's to the tune of close to 1 million tons. The street was working with 500,000 tons or thereabout. They do expect aluminium prices to cool off a little bit to around $2,400 per ton. They also went on to add that captive coal could result in 350 to 400 crores of savings in FY25, and that will move up to around 650 to 700 crores in FY26. So put all this together, metal stocks are under pressure because what came out of China was not as much as expected. But in fact, NALCO has come off the lows of the day post those comments that we got from Mr. Patra. In fact, let's listen into what the NALCO management had to tell.